Okay, let's go.
You keep taking prop firm challenges over and over again. You pay the steep upfront fees, and eventually you blow the entire account. The reason this cycle repeats is because you are guessing. You enter trades based on how the chart feels right at the open, rather than executing a documented, mechanical system. Today, we are going to fix that. I will give you the exact step-by-step strategy to pass these challenges and secure consistent payouts. We will build this system on two pillars. First, we will calculate the exact mathematical risk parameters for a $50,000 account. Second, we will execute a highly specific entry strategy timed exactly for 9:30 a.m. When you replace emotional reactions with a rigid set of mechanical rules, you stop treating prop firms like a casino and build a viable path to becoming a consistently funded trader. Most traders use the same lot sizes whether they are trying to pass a challenge or trading a live funded account. In reality, the challenge phase and the funded phase require two distinct risk management models. For the challenge phase, risk $600 to hit the $1,200 daily limit. This 1-to-2 ratio maximizes gains. Once funded, drop risk to $250 per trade. Against a $2,000 maximum loss, this buffer survives an 8-trade losing streak. To make serious money with small risk, you don't over-leverage a single account. You scale your income by stacking multiple funded accounts across different prop firms. 20 accounts risking $250 each creates a $5,000 risk capacity. Mathematically separating your aggressive challenge risk from your defensive funded risk prevents you from blowing accounts immediately after getting funded. This chart shows the absolute first step before looking at any trade, identifying your daily bias by observing the macro trend on the daily timeframe. The strict rule for trend alignment. If the daily bias is bullish, you only look for continuation setups to the upside. Never anticipate pullbacks. Once you know the direction, you rely on a time-based mechanic. At exactly 9:15 a.m. Eastern Time, switch your focus to the 1-hour chart. At 9:15 a.m., locate order blocks and fair value gaps aligning with your trend. Draw your zones directly over those areas. You must only draw zones matching the daily bias, ignoring all counter-trend setups on the board. Locking into a single direction and utilizing only the 1-hour time frame eliminates analysis paralysis and aligns you directly with institutional momentum. Now we move to the micro execution phase. Right as the market opens at 9:30 a.m. Eastern, you shift down to the 5-minute chart. This chart demonstrates the manipulation phase. You wait patiently for the price to aggressively drop into that pre-drawn 1-hour key level. This drop creates a psychological trap. Amateur traders seeing rapid downward movement at the open assume the trend is broken and panic sell. Your entry trigger is a 5-minute bullish engulfing candle completely inside the 1-hour zone. Execute exactly on the candle's close. Place your protective stop loss directly below the downward manipulation candle's lowest point. Set your take profit to a strict 1-to-2 risk-to-reward ratio. Waiting for the 9:30 a.m. manipulation removes the emotion of chasing volatile market opens and relies entirely on a fixed sequence of time and price. That is the complete daily routine. Separate your risk based on your account phase, align with the daily bias, mark your levels at 9:15 a.m. and wait for the 9:30 a.m. manipulation. Once the challenge is passed, dropping your risk immediately to $250 protects your funded capital. Adhering strictly to this boring mechanical protocol transforms erratic wins into consistent, reliable payouts. To begin practicing the system immediately, use the promo code KIMMEL for a discount on your first challenge. Mastering a repeatable, data-driven process provides the foundation needed to scale your trading income into 5 figures a month.